Hi children, welcome to Placid Family. Hope you all are keeping fine. I am Navya Sebastian, your accountancy teacher. You have taken commerce stream. Do you know the meaning of commerce? Commerce means trade. Trade means business. So what is accounting? Accounting means recording of these business activities into books of account. So in simple way, accounting is a part of business. Do you know who is the father of accounting? Father of accounting is Luca di Pacioli. Is the father of accounting. Then we are going to discuss the definition of accounting. Accounting is an art of recording, classifying, summarizing in a significant manner and in terms of money transactions and events which are in part at least of financial character and interpreting the results thereof. In simple way, accounting is the process of recording, classifying and summarizing the business activities or summarizing the transactions. What is transaction? Transaction means events in financial nature or business activities in financial nature. For example, purchase of goods, rupees 5,000, or sale of goods, rupees 1,000. This type of activities of the organization is called transaction that we can measure in terms of money. That amount we record into books of account. That is the process of accounting. So the first step is identify the transaction and the second step is to measure the value. And the third one, record, in this case, here that is the transaction. We identify it. And measurement, that is the 5,000 rupees, the value. And then the third step process is to record the transaction. That means record this purchase of goods in the books of account, that is called the journal. After the recording, there is a number of transactions is there. We classify the transactions on the basis of nature. Then that is the next step, that is the classification of the classifier. After the classification of all transactions in an accounting year, we summarize it. That means at the end of the year, we prepare final accounts. That is the summarizing. Through the summarizing, we get the results. That results we analyze and interpret it. Through the interpretations and the judgment, we get the exact results or the exact position of the organization that we can easily communicate to the users. This is the process of accounting. That's clearly mentioned in the definition. Next, characteristics of accounting. The first characteristics is identification of the financial transactions and events. That I already told you, identifying the transaction which is related to business or not, and measuring, that is the second characteristics, measuring the identified transaction. That means measuring the transaction in terms of common value. That means the currency of that country. In the case of India, it's rupees. So the first characteristics is identification of the financial transaction. Identify the transaction, purchase of goods, sale of goods, payment of salary, payment of rent, purchasing of furniture, that type of transactions. That's the firstly we identify it. That is the first one. Then the second one, that convert it into money terms. That's a common measurement unit. In the case of India, let's say rupees. Then the third one is recording this transaction. That means this identified transaction, we record it into books of account. Let's say firstly primary recording, that is called the journal. The transactions that we firstly record into books of account, that the first book or the primary book is called the journal. In this journal, we record a transaction on the basis of time. That means in this we record on the basis of chronological order. Then after the recording the all transactions, we classify the transactions as per their nature. That means this is the classification. For this classification process, we prepare another book that is called ledger. In this ledger accounts, we prepare a separate ledger accounts for each account. For example, in the case of payment of salary, we prepare a salary ledger or a salary account. In the case of purchase of goods, we prepare purchase. That type of same nature items or same head items, we separately record into another books is called a ledger account. So we want to know whether the organization is running in profit or loss, or we want to know the financial position of the organization. For this purposes, at the end of the accounting period, we prepare another book or another account that is called final accounts. That is, in the summarizing process, we prepare the another accounts that is called final accounts. In the final accounts mainly includes two items. That is the profit and loss account and balance sheet. Through the preparation of profit and loss account, we can identify the profit or loss of the organization. Then, and the preparation of balance sheet. Through the preparation of balance sheet, we can clearly identify the financial position of the organization. So, through the summarizing process, we get the results of business. After the summarizing, the next characteristic is analysis and the interpretation. That means analyzing and interpreting the financial data. Analyzing and interpreting this summarized data and to make effective judgment for that basis. That means on the basis of the summarized data, we makes the judgment and the management make the policies and the decisions. The last characteristic is communicating. That is, analyzed and interpreted financial data, we communicate to the users. That is, internal and the external users. Internal users means the users within the organization. For example, investors, employees, management, etc. And the external users means the bankers, creditors, government, etc. So the last process or the last characteristics of the accounting is communicating the exact results to the users. That is the main characteristics of accounting. The first one is identify the financial transaction in terms of money. And the second one, measuring the identified transaction. That means measure it in a common term. That is in the form of money term. That is the currency. Then the third one is recording. After the identification and measuring, we record the transactions into books of account. Then after recording, we classify it and summarize it. Through the summarization, we get the exact results of the organization, profit or loss of the organization, financial position, that means the assets and the liability level of the organization. Afterwards, we prepare our analysis and the interpretation. Through the analysis and interpretation, we get the correct decision or we get the correct judgment about the organization. Then last one, communicating the results to the users. That means the internal and the external users of the organization. Then the next head topic is objective of accounting. The first objective is maintaining the accounting record. Through the systematic records of transactions, we can properly maintain the books of accounts. That means we should follow the clear-cut rules and regulations of the accounting. That means like principles, we should follow the principles, concepts and conventions of the accounting. If you record the transactions as per the way, then we get the correct result of the organization's performance. That is the first objective, to maintaining the accounting records. That means the systematic maintaining of accounting records. If the accounting records are systematically maintained, then the results of the organization, that's a reliable one. So the first objective of the accounting is to maintaining the accounting records. Then the second one is determining the profit or loss. That through the preparation of profit and loss account, we can easily calculate the net profit or loss of the organization. That means in the financial data, all the financial data we record into profit and loss account. All the expenses in the one side and the incomes in the other side. Then we calculate profit or a loss. Through the proper recording of these incomes and expenses, we can easily calculate the profit or loss of the organization. Then, next objective is to determine the financial position. To determining the financial position of the organization, we should prepare balance sheet. That means in the balance sheet, that's a statement that has two heads, that is assets and liability. Assets means wealth of the organization. Liability is the debt of the organization. Through the preparation of balance sheet, we know the capacity of the organization. That means the assets level of the organization. And also we get the information about the liability. Liability means debt or a borrowed fund, etc. So through the preparation of accounting balance sheet, we know the financial position of the organization. Then the next objective is to facilitating management. After the preparation of this profit and loss account and the balance sheet, we get the clear idea about the organization. This will be helpful to the management for making the decision making and also controlling budgeting, etc. And also they can forecast the activities for the future. So the accounts are helpful for management for their activities, for their planning, budgeting and the decision making processes. And the next one is providing accounting information to the users. The next objective of the accounting is to give the information to the users. Users means that I already told you, that is the internal and the external users. For example, in the case of investors, they want to know whether their business is running in profit or not, because they invest their money into the business. And in the case of bankers, that's the outsiders or the external users. Bankers also, they provide a loan to that particular organization. So they want to know their funds are safe or not. So this type of users, the accounting provide detailed information about their financial performance to the users. These are the main objective of accounting. Okay, the next topic is functions of accounting. The first function, maintaining the systematic accounting record, that I told you in the objectives, that is the maintaining. We should record the transaction as per the rules and regulations. That means we should follow, when you record the transactions in books of account, we should follow the rules and regulations of accounting. That is the first function, maintaining the systematic accounting records. If you record the transactions in a properly, then the results of the accounts are a reliable one. So the first function of the accounting to maintaining a systematic books of account or maintaining a systematic accounting record. Then the second one is preparation of financial statement. Financial statement means final accounts. At the end of the accounting period, we prepare final accounts. The final accounts mainly includes trading and profit and loss account and balance sheet. Through the preparation of trading and profit and loss account, we get the profit or loss of the organization. And through the preparation of balance sheet, we get the information about the financial position of the organization. So the second function is preparation of financial statement. Through the systematic record of a transaction, we can easily prepare the financial statements. Then the next one is meeting the legal requirements. Accounting records are accepted as accepted evidence by the court of law. Then the fourth object functions is communicating the financial information. After the preparation, after the analysis and interpretation, we can communicate our financial data to the users. Then the last function is to assistance to the management. At the end of the year, we will prepare profit and loss account and the balance sheet. Through the analysis of these statements or these accounts, we can predict the future or we can plan the activities for the future. And budgeting, controlling, decisioning, all these activities depends on the financial performance of the organization. So, with the help of the final accounts or the financial data, we can assist our managerial activities. These are the main functions of accounting. Then the next topic is advantages of accounting. The first advantage is financial information about business. Financial performance about the business, that is profit earned. Through the preparation of accounts, we can clearly know the profit earned or loss incurred by the organization. Then the second advantage is to assistance to the management. The management makes the business plans and take decisions and budgeting, etc. With the help of the financial data, they can clearly do their activities in effective manner. That is the second advantage, assistance to the management. First one is financial information about business. Through the preparation of final accounts or proper recording of transaction and the preparation of final accounts, we get the information about, that means the financial information about the business. And the second advantage is assistance to the management. This financial information give assistance to help the management to do their activities in an effective manner. Then the third advantage is facilitate comparative study. That means with the help of this financial data, we can compare our level of performance with the 1 year with the another year. For example, the profit of the last year we can compare with the current year. That type of comparative study is possible with the help of this accounting data or the financial data. Then the last one, fourth one is facilitate settlement of tax liabilities. We know there is number of taxes there, income tax, GST, etc. For this type of tax settling, we want the clear-cut evidence or supporting documents. This profit and loss account and balance sheet helpful for the settling of tax liabilities. And the next one is helpful for decision making. That also a part of the management. With the help of the financial data, we can help the management to take the proper decisions. These are the main advantages of accounting. Now, what are the main limitations of accounting? There is a number of advantages there. Instead of there is a number of limitations also be there. The first limitation is accounting is not fully exact. That means all the transactions in accounting we recorded on the basis of evidence. Evidence means bill, vouchers, receipts, etc. For example, when you purchase the goods, you get a receipt or a bill. On the basis of that evidence, we record the transaction into books of accounts. Sometimes we record some transactions not on the basis of this evidence. That also be included in the accounting. So the profit or loss of that is not in a reliable or not in a fully exact one. But we should record into the books of account. That is why it is not fully exact. Then the second one is unrealistic information. Accounting informations may not be realistic one. Accounting, we record the transaction on the basis of concepts and the evidences. All these concepts and the conventions are not some cases. For example, when you purchase a car, the value is rupees 5 lakhs. We record the transaction in the books of account is 5 lakhs. But after the 3 years use, the market value of the car is become 1 lakh. practice. But the accounting, we reduce some amount as depreciation. But the value in the books of account is 3 lakh or 2,50,000. It is not similar to the market value. This type of unrealistic information may include books of account. All the accounting records are based on principles and concepts. Sometimes it is an unrealistic one. That is the second limitation. Then the third one, accounting ignore qualitative information. That means in the accounting, we consider only the quantitative aspect. That means in terms of money we can report. The management skill or the employee skill, public relations, that type of factors are not recorded into the books of account. That means we ignore the qualitative aspects. We consider only the quantitative aspect. That is the another limitation of accounting. The fourth one is accounting ignore the price level changes. Every year the value of price becomes diminishing or decreasing. It does not consider the price level changes. It records all the transactions at the purchase cost or the historical cost. That's why the price level changes does not consider. That also influences the accounting. That is the another limitation of accounting. It does not consider the price level changes. Then the last limitation is accounting may lead to window dressing. Then what is window dressing? Window dressing means manipulation in books of accounts. That means actually concealing the vital facts and showing the organization position in a better way. That is called the window dressing. This may result the accounting profit and loss or the financial position is not a reliable one. If the manipulated accounts does not show the exact result. Sometimes it may window dress or conceal the vital facts and show in a better status or a better position. That also a limitation of accounting.